A quick view on Divi's, which is taking a very, very sharp cut. Dipan Mehta is with us. Dipan, good to speak with you as always. Thanks very much. We've of course been we've been talking about the impact of what's happening on the Adani Group on the broader market. But for the group themselves, I mean, the two stocks of interest which we've heard a lot of people mention is Ambuja and Adani Ports. I don't know if you have any view on these two after, a full week and almost 7 days of this right now, and prices have come off sharply. Both these, the port company and the cement company, your thoughts?
Yeah, Prashant, thank you for having me on your show. I think the common thread here is that valuations at least are reasonable for both these companies. And Adani Port, especially given its position and the scope to increase its market share, because a lot of the ports which they have acquired and which they have built, there is scope to expand capacity there and increase the utilization levels. And these are high operating profit, operating leverage businesses. So, and considering that import-export business should improve, I think that investors looking at least Adani Port in a favorable light because mostly its valuations are cheap. When it comes to Ambuja, I think some amount of nervousness has been addressed when they said that another stock of ACC or Ambuja has been pledged. And with Ambuja, you also get the benefit of buying into ACC as well. And there's already the expectation that at some point in time, both companies may be merged. And we understand these companies very well. I think Ambuja ACC have been around for decades, even before Adani came into the picture. And there are easy comparables for this for these businesses. And now the way they have corrected, I think both the companies have reached attractive valuations. So if somebody has a positive view on cement, and mind you, we don't have a positive view on cement, but if somebody has a positive view on cement, then certainly these two companies are available at reasonably attractive valuations compared to, say, an Ultratech or, for that matter, Shree Cement. And then you can always expect these companies to expand rapidly their capacity, and that they've been lagging in capacity expansion prior to the change of ownership. But that may get changed going forward also.
Guys, timing is everything, right? I remember when Adani Group took over both these two assets, the entire talk was there'll be integration from the group entity. Now they've bought some coal and it's going to be, they're saying they won't have to pay any money till the middle of the year. That's till June. But they're prepaid and they're saying we're going to save money. But now, because of the timing of this particular announcement, Street is saying that why did they prepay? What is the benefit? So they're going to be having a con call next week. So timing is everything. At one point of time, everyone was building in synergy benefits. They'll buy coal from the group entity and it'll be great news. Now suddenly they're actually buying coal from the group entity. But you're questioning the timing, you're questioning the rate, you're questioning why are they prepaying. So, let's see how this goes. But as Dipan said, they are not positive on the cement space on the whole, but valuation-wise, well, it's come to an interesting point. And later this evening on the Editors Roundtable, I'll put out a piece on this itself. Is value emerging in both these two stocks? You stay tuned for that. But Dipan, the other number that came out just around 20-25 minutes or so ago was Bank of Baroda. The stock is up close to around 4% as we speak. Abhishek points out that on the loan growth side, maybe it's lagging a little bit. Though asset quality improved, and valuation-wise, we know these PSUs have trade at a discount in comparison to the bigger names. Your view on the banking space, particularly Bank of Baroda?
I think it still remains a trading bet, Nigel, and so do all the other PSU stocks. And I'm sure SBI also come out a very good set of numbers, and you could expect a trading rally as well over there as well. But one thing which comes to mind is that the entire industry is getting more and more competitive when it comes to lending as well as when it comes to raising deposits as well. And that's where I think where private sector banks may have an edge. End of the day, I think technology, manpower, services, systems, I think all of these do come into play. And just because the PSU banks have cleaned up their balance sheet, have got reasonable capital adequacy, doesn't mean that they are in a far better position to compete against the private sector banks and the NBFCs and the new generation fintech companies. So from that point of view, I feel that I'm more comfortable buying the private sector banks. I think the numbers which came from the larger ones, the mid-cap ones, were very impressive. Valuations also are reasonable compared to their historical levels. And it's just that, you expect the private sector banks to produce secular, visible, stable earnings over the next several quarters. But the same cannot be said for the PSU banks. And if you compare the PSU banks' loan growth or deposit growth or some of the other parameters, they are still lagging the private sector banks. The only thing in favor of PSU banks is the valuation. but that's known to everyone. And you may have that further one-time correction to mean further expansion of their PE price to book. But that's about it. But from a longer-term perspective, 3-year, 5-year holding, you're better off in the private sector banks.
Okay, well, that's the word on some of the bank names. Market's still holding up about 7